It is my belief that the upcoming week could very well go down as the most important week of President Trump's 4 years in office. What do I mean by that? I believe it is very, very clear that we have seen a noticeable vibe shift in consumers, in businesses. And if this vibe shift is not reversed, tweaked, improved this week, we could be on the cusp of a negative feedback loop. This week is important. Now, I don't think it goes, or it should say without saying, it should go without saying, something like that, that the chances of getting any large agreements on free trade is unlikely, right? These things are complex. But without question, it is my belief that President Trump and his administration needs to start showing concrete evidence that it is working, that better agreements are coming. Without these wins, this negative feedback loop will continue. It will get embedded in the economy. And once that happens, you can guarantee a recession. I really do think it is this week. If this goes on in this trajectory for very much longer, we're not talking, short and shallow recession, which I think is likely either way. We could be talking something more significant. Again, I'm not expecting an agreement with China or Japan or any of these, the EU, but we've got to show that we're talking. We've got to show that it's getting better. I did see one headline over the weekend, it might have been this morning, that said Japan is considering dropping conditions on U.S.-made cars. Again, it's that kind of information that will give the tried and true Trump fans something to hold on to. Because let's be clear, if you hate Trump, there's nothing you could do or nothing he could do to make you like him. But what Trump is risking right now is the folks in the middle, the independents, some of his maybe less vocal but supportive Republicans. And if this continues, he could very much lose them and perhaps lose them for good. So again, I think this week coming up, we have to see multiple wins go on the board. Starting with this tariff strategy, free trade strategy is very disruptive, purports lots of negative headlines, and he needs to reverse that, or it could get very, very ugly. Other information we should be talking about this week, let's talk about some earnings. We are starting to get into the teeth of earnings. We've had a few last week, but mainly financials. On Monday, we will see, again, some financials, Comerica and Zions Bank, Bancorp. Again, kind of mid-market banks, very important to watch. Tuesday, we will get Capital One, Northrop Grumman, Verizon, and Tesla. Woo, those Tesla earnings could be interesting. In the Tesla earnings, I'm going to really be looking for, breakdown of non-U.S., right? What's going on in Europe, in China. We have heard some horrible metrics, so it'll be interesting to see what goes on with the Tesla earnings. Wednesday, you will get IBM, ServiceNow, AT&T, and Chipotle. I'll be interested in Chipotle on Wednesday. Again, they were a pandemic darling. They have been able to pass on lots of inflation to their customers with higher prices. I'm curious, are people starting to pull back from casual dining? And if they are, I think Chipotle would be a place to see that. So Wednesday earnings will be important. Thursday, we'll get PepsiCo, Southwest Airlines, American Airlines, Alphabet, and Intel. For me, the story here is going to be American Airlines and Southwest. Again, American Airlines enjoys international routes, has more expensive legs, where Southwest is really a domestic carrier. We heard from Delta, I believe, earlier talk about domestic being weak. So if that's true, and people maybe aren't just trading down from Delta to Southwest, it will be interesting to see. And American, what's going on with American versus United, which is something we saw last week. And then on Friday, we will get Auto Nation. Again, what is going on in the used car market is very important. Are prices going up? Is inventory going down? Right? Was there a bump at the end of Q1? All things to be considered. Not only do we have earnings next week, but we've got a bunch of economic data that will be important. Starting hot on Monday will be the U.S. leading economic indicators. What is going on across the country, sometimes called soft data. Again, U.S. leading economic indicators will be out on Monday. Tuesday, we will get another Fed speech. Wednesday, we get 3 Fed speeches plus the Beige Book and new home sales. What is going on with new home sales will be interesting. Thursday, we get initial jobless claims and durable goods. Right? Durable goods will be interesting again because I suspect there was a quasi bump or demand pull forward because of the tariffs. Again, I think that's going to create a void in future months, but we shall see when we get there. And then Friday, probably the most important economic metric of the week will be consumer sentiment. I think last report, it was the second lowest on record. This is from memory, so I could be off. I think it was 50.7. The record low was 50. So does consumer sentiment break below 50? And to be clear, folks, I think it does. I think we post the lowest consumer sentiment on record. This is back to my earlier point about this being the make or break week for Trump. He's just losing the average consumer. The media talk track, all of this, it all seems negative. It all seems bad. We've got to get some wins, or he has to get some wins, post them on the board, or this thing could go south and go south quickly. Folks, I don't know if you know this, but One Rental at a Time, this YouTube channel, actually takes the content and posts it on Spotify. So if you are a Spotify user, you could do me a favor and subscribe to One Rental at a Time. If you're out running and whatnot, you can just look up One Rental at a Time on Spotify. There was a time that all my content didn't go there, but I've worked with the team, and starting last Friday, it is my belief that you will see all of the content daily up on Spotify. It might be 24 hours late, but it will be there. So you can check me out on Spotify. Also, don't forget that Lance Lambert and I are co-authoring the Zuber Letter. Yeah, you can go to zuberletter.com, get a weekly update of a topic that Lance and I choose. It's been going on for about 6 months or so. So again, if you want to get daily or weekly free, it's free, nothing paid there. You want to get the Zuber Letter, something in detail, you want to see what Lance and I are working on, you can go to zuberletter.com. So that should be fun. Probably the most important article I read, or at least intriguing article I read, was Zillow. Zillow goes bearish on housing. Yes, folks, Zillow, the company that was purported to have 2025 up roughly 5% home prices when they first estimated, now in their latest estimate goes negative. Zillow joins the crash bros. Home prices going down negative 1.7%, according to Zillow. I think it is far more interesting to realize that Zillow is on a very negative trend. I think from memory, it went 5.7, 3.1, 1.2, and now negative. So again, will they be at negative 3% in a month, in 6 weeks? Will 1.7 be the bottom? Who knows? But that is interesting. Actually, I think Redfin's article was far more intriguing. Redfin posted that 24% of Americans are delaying major purchases. In the article, it talked about housing and automobiles, but you can extend that to furniture and the like. Again, this is back to my very first point of the show. Trump has to start posting wins, or this 24% of Americans delaying purchases will become 37, will become 43, and bingo, bango, recession. It is that simple. Consumers make up 68% of the economy. And if consumers are pulling back in that much of a way, it will go bad. And lastly, I think we talked about this on Thursday. This is how you can actually get deflation. right? Right now, the Federal Reserve keeps talking about tariffs being inflationary, which again, they could be. I suspect, given what consumers are doing and saying, that these tariffs will actually prove to be deflationary. Not immediately, right? You will get a short-term bump, there is no question. But when you look at the totality of the tariffs in history, in a year, in 18 months, it would not shock me if they prove to be more deflationary than inflationary. So this is what I'm calling the Powell mistake. Again, Powell is the Fed president. He will own this. He's called transitory. He's says inflation's coming and this, that, the other. Again, where I sit, where I look, when I try to evaluate consumers are not in the right headspace. The average consumer is pulling back in lots of ways, some big, some small, and that will move on. Netflix did report earnings on Thursday, I believe, after hours. So after we talked, they beat top line, beat bottom line, and of course noted that tariffs are not impacting their business. I thought it was interesting that Netflix CFO actually had to answer that question, that tariffs are not impacting their business. I thought that was almost comical, but I guess in today's environment, you have to ask. D.R. Horton CEO, not to be outdone, no impact from tariffs. And then in big quotes, yet. So again, we will see that. Got another example of a real estate play that crashed 73%. You can go look this up. Wells Fargo Plaza in San Diego, California. Yes, folks, San Diego. San Diego. Sold for a 73% discount. In 2004, 21 years ago, it sold for $148 million. It was just retraded at $40 million. You can go look it up on Google or however you would like. Again, it's Wells Fargo Plaza in San Diego, California. Folks, I want to let you know about a very exciting ORAD event occurring in the Bay Area. Folks, if you are in the Bay Area of California, Silicon Valley, often called, I want to let you know about an event that Kenny, Jen, and Katie are putting on. They are putting on a meet and greet ORAD style event. It will be occurring on April 27th at 1:30 p.m. in San Jose, California, specifically San Pedro Square. San Pedro Square, San Jose, California. If you want more details on this, you can reach out to Jen or Kenny or Katie inside our school community. They can give you links. It's actually, there's a post inside school so that you can go there. Again, if you are in the Bay Area and you want to talk rentals, getting started, growing, networking, whatever you want, April 27th, 1:30 p.m., San Jose, California, San Pedro Square. Since we're talking about school, let's congratulate Amon, Quinn, Tara, and Martise. Martise actually joined here in the last 24 hours and actually canceled his membership already. Again, folks, I say this all the time. If you want to join school and try it out for 30 days, it costs you $20. That is apparently what Martise did, and I am here for it. If we don't provide value and you don't like it, you should cancel. So again, I think joining and then going back in and canceling the membership gives you the ability to evaluate it, and you are not on the hook for anything else. So again, I am totally okay with the try before you commit. And I think what Martise did is something more of you should try. Again, sign up, cancel if you like, see what you see if the community vibes with you, see if you like the thousands of dollars in education, the 6 masterminds, and of course, in 16 minutes, I will be going live inside school. It will probably be a very low attended event because, again, it is Easter morning. Happy Easter to everyone, which is okay. If you are going to join, I will be there. No one joins, it's okay. I'll go for a walk or something. So again, you can join school. I will be going live in 16 minutes. Let's round this story out with Fed President Daly, who was speaking on Friday. And again, we don't do a show on Friday, so this is what I got for you. We may have to hold policy tighter longer. Again, folks, higher for longer. We've been telling you that for 9 months now or so. Risk of inflation has increased. Again, I think the Fed is going to see that is, God, I can't believe I'm going to use this word, transitory. And deflation, I think, will be the bigger risk, but we shall see. Patience is really what matters. Again, higher for longer. We have room to reduce rates, but must be gradual. I thought that was an interesting one. Fed President Daly was really the first Fed president that I've seen recently being in the last 7 days, even hint that they might be restrictive and thus be able to cut. And then the last line she had to say, kind of putting that last one to bed, Fed is in no rush. Again, we are where we are. I did see that Trump's approval rating drops to the lowest level on handling the economy. This was I think this is a metric that he cares about. I think he is going to look at the approval ratings without question and say fake news. It's what he does. But I think it is very clear. Again, back to my opening statement. The administration, Trump specifically, has to start posting wins. They've got to start pushing back against this negative torrent of just crap. And this is the week to do it. Or, unfortunately, it may be too long, too far, too gone to put a dent in that. Lastly, let's do one more thing. Talk about Scott Bessent. Scott Bessent, Treasury Secretary, said, we are working on the big 15 economies first, which again, I think makes logical sense, but also means probably going to have to wait a while before we see anything because these trade things have to be complex. And then lastly, Dustin, congratulations on getting your next deal. I will be mailing your blue or your black card, I guess tomorrow, right? The post office or mail's not picked up on Sunday. You'll get this going out in the mail tomorrow, Dustin. Congratulations, folks. You can get as many black cards as you like, or if you get your first deal, we'll send you a gold card. Folks, I want to thank all 97 of you that are joined. I know it's Easter morning, so I totally expected a low attendance, but I wanted you to know that I recognize you. I see the comments. Happy Easter. Happy Easter. I appreciate all of you joining this morning. Know it means the world to me that you show up for my lives. Take care, have fun, and I'll see you inside school in about 13 minutes. Bye.